Well, first of all, good morning, New York. I used to live in New Jersey, used to work off of Madison Avenue a decade ago in ad tech. It's really great to be back. I haven't been back to the city in about 7 years. So today we're going to be talking about a very important topic, monetizing blockchains. How do blockchains capture value in a way that doesn't destroy execution quality for the end consumer? But first, we're going to have to talk about what Supra does, what is our infrastructure stack, and then we'll talk about the problems in blockchain and how we seek to solve them. So Supra is a vertically integrated layer 1. What does vertical integration mean? It means it's a smart contract platform that supports multiple languages. So we are live right now on mainnet with Move language. Move language is a great language. We support it greatly, but we all know that EVM is going nowhere. Supra EVM is live on testnet right now. And after that, we're actually working on Solana VM. So we believe that blockchains are computation platforms and they should be language agnostic. Another major innovation we offer is system-level automation. It's a decentralized if this or that service that triggers on its own. This is a first for a blockchain, to my knowledge, and it definitely is a first for a smart contract platform to have Oracle price feeds and automation all in one. We also are building cross-chain communication protocols. Now, I'll be talking about this a little bit more soon, but how do we do it? Our approach is technically bridgeless. What does that mean? Well, we just recompute the consensus of the chains we interact with. Pretty simple idea, very powerful concept, cryptographically secure. This will be going to mainnet pretty soon. It's on testnet right now. It's been live on testnet for 45 days or so. We're just finishing our last couple audits here. So I mentioned data Oracle price feeds. We finalized 500 data pairs from cryptocurrencies to equities, commodities, FX. Very soon to be offering technical indicators, interest rate cuts, and job reports. And we're finalizing this data on 600 milliseconds to 900 milliseconds. And our next iteration, we think we can cut down the latency even further. A new one is Threshold AI Oracle. So Threshold AI Oracle, how do you get AI onto a blockchain? This is a very risky business, right? Because blockchains hallucinate. Rather, blockchains don't, but AI can hallucinate. They can be incorrect. I'll be talking about how we achieve this, and this is very early. This is like, we published the paper like three weeks ago. We have an early alpha prototype as well. But also, we offer on-chain randomness. This is through threshold cryptography. So at a high level, and I have to be conscious of the time because there's a lot of information we have to cover today. We achieve these services by randomizing nodes into subcommittees called clans. And these clans themselves can be shuffled or reassigned to be doing different services. One clan can be doing execution at one time. The next epoch, it could be doing VRF, verifiable random function. Another epoch could be doing Oracle services, and so on and so forth. Now, Supra is also a very scalable blockchain. In this particular test, on a globally distributed network of 300 nodes across 6 different regions, we've achieved 500,000 transactions per second throughput with sub-second consensus latency. I want to be clear that this is about throughput and latency for consensus, doesn't include the execution. However, I will be touching upon execution strategies momentarily. But Supra has a wonderful research team led by Dr. Annika Kate, and we have innovated other consensus protocols, including Hydrangea consensus, which is a single voting round protocol that still maintains 33% Byzantine resilience to Byzantine and crash nodes. We also have Sailfish, a direct acyclic graph that just got accepted to CCS, the most premier computer science venue in the world. Supra STM is our parallel execution approach, inspired from STM approaches as well as Block STM and others. Let's talk about this for a second. So first of all, the end-to-end latency for a transaction, from the time you submit it till it executes, approximately 80% of it is actually consensus and data dissemination. Execution is actually just a small part of the end-to-end experience, but it's still meaningful. So we want to optimize that component as well. So Supra STM, STM stands for Software Transactional Memory, enhances parallelism. In our tests, we have achieved 2.5 times faster execution than sequential execution. Everyone knows that Ethereum executes transactions one after another, right? Many of you think that that is actually the bottleneck. It's not. Consensus is the bottleneck for Ethereum. You can actually do like tens of thousands of transactions per second on the EVM sequentially. Nonetheless, our Supra STM has achieved 2.5 times speed up on Ethereum's sequential execution, and also 1.33 times speed up on parallel EVM. Parallel EVM is BlockSTM's approach applied to Ethereum. So this is important because in the end, we're all looking for high throughput and low latency. Moreover, Super offers, well, let me kind of just describe this a little bit more since this slide came up. So more or less, the way that Super STM works is we eliminate unnecessary retries during execution. Long story short, it's best to just go to our website. We have white papers. There's a lot more to cover. Take those white papers, put them to AI. You'll get the summary. Highly recommended. OK, let's move into the other interesting things we work on. So Tau, Threshold AI Oracle. How do you get on-chain reasoning, or reasoning from AI on-chain? And you need to always have safety, and security is always number one, right? But we know that AIs are not always accurate. They hallucinate, they make mistakes, right? So what we introduce is a committee-based system where one committee could actually be focusing on like the positive and optimistic side of things, looking for the good side of the query. Another one can be pessimistic and saying, no, this is very like risk averse. Another one can be scanning news. Another one can be scanning social media, right? And what they have to do in their own committees is they have to threshold sign, come to an agreement among themselves, and then from committee to committee, cryptographically sign this and post it on chain. And now, at that stage, we believe that we can actually, it's safe to consume in smart contracts. So we can be running different LLMs, different models, different agents, different committees, shuffled together, specialized committees sometimes for various things. And this is how we can bring reasoning on chain. We're the first to do this as well. So this is alpha. It's on an alpha testnet as well. If you want to, if you're a developer, you want to have access to this, reach out to us. The big one, though, is automation. Decentralized if this, then that logic. Many folks who are not developers come to blockchain thinking, oh yeah, blockchains are world computers. They should speak to the outside world. They should speak to other blockchains, and they should be able to trigger their own transactions. But they don't. You need an external oracle or keeper to do this. This is where the magic happens, though, particularly when you have a smart contract platform, access to Oracle data, price feeds, as well as Threshold AI Oracle, which we call Tau, T-A-O, and automation. Because now you have a broad set of data points and triggers to execute automation. So let's just talk about what you can do with this. High level, let's talk about, let's suppose that you're trying to dollar cost average to buy Bitcoin on dips. So we have the price feeds. It's finalizing on 600 milliseconds, 900 milliseconds. Suppose you see a drop in the price. The automation observes that drop, and based off of your automated task, will automatically execute it in the same exact block. We call this zero block delay execution. This is a very powerful tool because you have no latency. You have ability to execute faster than a high-frequency trading firm, right? So we're democratizing powerful tools for the everyday user. We think you can reimagine all of DeFi with automation. We call this automatic DeFi. We think that we're moving, especially in this era of AI, right, where automation, autonomous driving, automated workflows, we think this is very natural for this to happen in blockchains. But you really needed to vertically integrate several things: smart contracts, price feed oracles, threshold AI oracles, and have automation in a single stack. So what are we building? We're building for this the particular demo. This is an early prototype, but it's a no-code logic builder, basically. Imagine just talking to AI, hey, this is what I'm trying to do. I happen to think, for whatever reason, when this meme coin goes up and Ether is down, Bitcoin is going to go up. Whatever. People can have all kinds of strategies, right? We have things like trailing stop orders, limit orders beyond that. This is just the beginning. We're going to build a whole repository of strategies, micro-strategies that you can mix and match. AI will help you put it together. So the key point is it's all about reaching more of a retail and just general audience, right? So we have to make these tools simple. So once again, it's just like, hey, this is what I'm trying to do. Help me out. You can basically have no idea how to code, but you have some idea, or you maybe have some theory or thesis that, hey, I just noticed over the years that this happens. When this happens, there's a price movement. So we make this as simple as possible for the end consumers. This is just the beginning. What you're seeing here is already evolved from what we're deploying. So here in the screenshot, you can see that 302 executions have emerged We execute this at the end of every block, and our blocks are so fast we can execute it up to 3 times per second. So it's virtually instantaneous execution when the conditions are met, right? Oracle price feed lands to the block, transactions land to the block, and at the same time, if your conditions are met, it will deterministically execute. High level, we're building towards a drag and drop builder, a logic builder, visual builder, so you can say, hey, these are the intervals, do this in this interval, and the triggers, like what should trigger the automation? Maybe it's a price feed, maybe it's a sentiment analysis feed, right? And then also the action, what do you want it to do? This is only the beginning. Just to share, we have kind of built some strategies, back-tested it on historical data, and it outperforms buy and hold. Of course, there's other folks that will create all kinds of creative strategies, and our aspiration are that these strategists, these developers, and actually you don't have to be a developer for this, these strategists are actually creating these approaches that actually outperform the market. What they can do is open up what we call an auto vault. So folks can just pool their funds in and execute the strategy together. Or they can take the strategy and tweak it further. So automation has been on testnet for about 2 months, and we're in the middle of deploying it as we speak. Our developers are doing it right now. We have about 20 more nodes, 30 more nodes before it's ready to go. We have to also update the RPCs. It's another challenge, but it's underway. By the time that Permissionless is over, we're well underway with automation. We're the first to ever do this. This is so obvious once you look at it. Every blockchain is going to want this, and we have the lead here. Supernova, as I mentioned, is a cross-chain communication protocol. Layer 1 to layer 1 communication, it's bridgeless. There's no bridge. How do you possibly do that? Well, in the proof-of-stake world, right, you have the awareness of who are the validator sets. You have to stake. This is public information. So we just recompute the consensus of the chains we interact with. Simple, cryptographically secure, powerful. All right, let's go into the main topic today, though. What is the biggest problem in Web 3? Well, blockchain economics are broken. What do we mean by that? Well, even Bitcoin is going to have some problems. Once block reward subsidies are over, you're supposed to survive off of transaction fees? Really? That's going to be tough. I'm not throwing shade at Bitcoin. We love Bitcoin, of course, right? So transaction fees are trending towards 0, especially on high throughput chains. In fact, transaction fees should not spike unless the chain is getting congested and unless you're hitting these execution capacity limits. It should be dirt cheap. In fact, our transactions are like less than 1/10 of a penny. And block space is abundant. Base fees are only sustainable if the layer 1 is continuously saturated. Then you might have a business model. But we're talking about like Visa, MasterCard times 2 simultaneously, continuously, right? It's going to be tough for all of us to get there when our industry altogether is less than like 20,000 transactions per second. So a business model built on gas fees alone is not sustainable. L1s need a fair and transparent revenue capture mechanism. The second biggest problem, this pertains to the main point today, is Web3 is losing over $1 billion a year through MEV, maximum extractable value. We have tens of millions of users, but really there's probably only a handful, maybe less than 500 to 1,000 of these expert MEV extractors. These are very clever, smart people that are frankly brilliant, right? And it's a blockchain that's permissionless, and they're able to do this, but that is taking out value from the ecosystem, and it also ruins execution quality. Execution quality, ruining it, what it means to the end consumer is like they don't get what they expect. They traded this, they thought they were going to get a certain outcome, they didn't get it. You can't constantly fleece the end consumer, or they're not going to come back. They're going to hate this industry, right? I mean, we all heard that the instance where someone had a $200,000 transaction on, I think it was Ethereum, and they left with $5,000. This is basically, it's just not okay. So what is execution quality? Well, people want speed, they want fairness, they want cost efficiency, and they want reliability. So this is our North Star. We want to build towards this. And Supra being a new layer 1, we have the opportunity to think from first principles, to rebuild infrastructure from scratch to address these things. So toxic MEV harms users, but it benefits searchers and validators on the order of $1 billion a year, maybe more. Good MEV, however, there is something called good MEV. That's actually good for the ecosystem. It's good for protocols. It's good for end consumers. because good MEV is like timely liquidations, so keeping protocols solvent. Good MEV is also arbitrage, keeping spreads tight. So we can actually get there, and I'm going to talk about how. So first of all, I am conscious of the time, and there's a lot to cover still, because I haven't gotten to the main point, which is, let me just kind of set the stage a little bit more. So front running, this is when someone sees a big transaction, buys the asset before it's executed so that you actually just don't get the better execution, someone else did. Sandwich attacks is taking this even further, where they buy it before you and then sell it right after you. So by the time you get your final balance, it's not what you expected. This is really not good. Censorship is pretty bad as well, of course, when a node operator perhaps doesn't include your transaction and inserts theirs instead. Not great. So a lot of this value is being sucked out of the ecosystem to folks that are not necessarily aligned or necessarily giving value back, right? And this is a problem. Toxic MEV leads to leaked value from ecosystem stakeholders. Token holders, dApps, node operators all lose out. So how do we solve this? Well, there's not a perfect answer. I'm not going to pretend that we have it, but we have very good ideas of how to mitigate this. Step one is to randomize the execution order. So as I mentioned, Super has built-in on-chain randomness. So suppose the transactions land into the block, but you don't know the order in which it will be executed until execution, after consensus. Now the astute MEV connoisseur will say, okay, I'm just going to spam your blockchain to increase the probability of my transaction landing where I want it to be then. So you have to pair it up with localized fee markets, where if someone tries to hit the same state or smart contract, the fees exponentially go up. So it becomes cost prohibitive to spam. The final one is the main way to mitigate toxic MEV, which is encryption decryption. So you submit a transaction to the blockchain, it's encrypted, it's ciphertext, no one can read it. You don't know what the intention is, and therefore I cannot target you. And then during execution, we have a method that we're still working on, but we believe is going to be highly efficient to decrypt it during execution time, giving you the highest level of security and protection. These three strategies put together are how we plan to mitigate toxic MEV. But let's talk about good MEV, okay? Good MEV is timely liquidations to keep protocol solvent. Arbitrage to keep spreads tight. These are actually good for execution quality. End consumers don't want to have cascading failures. End consumers want to have tighter spreads. Good MEV is actually good for DeFi. Now, the thing is this. Good MEV benefits protocols and users if and only if it can be captured by the layer one. It's still being captured by MEV searchers and beyond. So a partial fix, what Chainlink and Aave are working on with Flashbots is to effectively, the Chainlink Oracle price feed triggers a liquidation. The bundle, the Flashbots bundle, bundles this together with other kind of MEVs and then submits it to a block proposer who, if the tip or the bribe is large enough, will accept it, and then they revenue share it back to Aave and to Chainlink. This is a good start, but this doesn't address a fundamental issue, which is the infrastructure stack. Moreover, this doesn't solve toxic MEV. There's still an incentive to max out the MEV because you want to be able to bribe the node operator the most you can. This is not great. But what if the layer one could capture good MEV and mitigate toxic MEV? So automation, this is where this comes in. This is necessary in order to do this as far as we can tell, and this is something that we intend to do that no other blockchain has thought about doing. So our block structure, I just want everyone to know that things might change, but by and large, we're thinking it'd be like this. At the very top of the block, we accept and prioritize Oracle data. So we have our own Oracle, and our blocks are moving faster than the Oracle finishes, but when it lands, we make sure it lands at the top of the block. Why is that important? It's important because this is what triggers most of the MEV liquidations and so on. Then is the community automations, folks that have registered automation tasks. They go next, regular transactions after that, and then at the very end of the block, we have system-level automation, which I'll be talking about, and this is how we plan to capture these use cases. So step one is to mitigate the toxic MEV, and how do we internalize and socialize and redistribute the good MEV? This is the focus of the conversation today. So we have a new primitive called auto arbitrage, okay? So at the end of the block, if there's any opportunity that is missed by end consumers, Supra will go ahead and execute a series of transactions to rebalance these pools and take the profit and redistribute it to stakeholders. That's token holders, that's node operators. Remember, we're taking away bad MEV from node operators, we aspire to, and we want to replace it with a new revenue model from this good MEV capture. And it also goes to the DApp. Right now, DApps don't necessarily capture any of this value. This is why Chainlink and Aave and Flashbots are collaborating, because they want to benefit the respective systems. Auto liquidations, these are a big revenue driver in MEV. More or less, Supra is introducing a decentralized treasury that's designed to be network-owned, so it's network-owned liquidity. At the end of the block, if there's any liquidation that was not triggered by the community, Supra's system-level automation will scan for it and execute it, flash the loan from our treasury, pay it back in the same transaction, take the profit and redistribute it in real time to stakeholders. This is pretty radical. This is a new type of revenue model that has not ever been done in blockchain before. So I discussed how the proceeds might be distributed, maybe 50% to the treasury. That is community. It's focused on community. This means we could be doing buybacks. We can be doing reinvestment into the ecosystem. Hopefully, we could wean off of block rewards, right? The DApp, revenue share with the DApp into the node operators. This is a first for any layer one. So we're moving towards this direction because we think this aligns incentives, keeps everyone aligned, and therefore, just healthier. So I am conscious all the time, so I'm gonna have to go a little bit faster, but I haven't really made my full point just yet. But basically, the treasury will enable buybacks, facilitate ecosystem initiatives, foster continuous development, support network health, wean off of block rewards over time. Value stays within the ecosystem to those that have a vested interest in the ecosystem, instead of being extracted to a couple hundred sophisticated actors. So we have to talk about the main thing here, which is we realize that automation, the priority in which these automations execute, is very, very important. Because if there's a liquidation or arbitrage opportunity, the first to execute it gets the win, gets the proceeds, right? So we realize that an auction model, just like other DeFi protocols and also Google and Meta, have realized that auction model is a profit maximizing approach to achieve and to capture this value. So what are we auctioning? We're auctioning priority to execute automation tasks at the top of the block. So an example, let's suppose there's a large $1 million position. There's a 3% reward. And if you liquidate it, you can earn $30,000. Well, in an auction, someone might bid $3,000, someone might bid $12,000. Eventually, someone will probably bid to the highest point that is worth it to them, maybe up to $29,000, right? And this value, why would they do that? Because they're still making $1,000 by getting this transaction. So it could go that far. Once again, it's split across the decentralized treasury to the node operators to the dApps, becoming new revenue streams that they are not capturing before. This is only possible if you vertically integrate, and this is what we're all about. As you can see, we completely decouple from the transaction fee. The transaction fee might have been 1/10 or 1/100th of a penny. Instead, it's $29,000 and redistributed to the network. Oracle data goes first, auctioned automation goes next, regular transactions, and then system-level automation for opportunities that are missed by community will clean up at the end. So what others leave behind, we capture and redistribute in real time to the stakeholders. This is what we think is going to be a very, very healthy blockchain. It'll take some time to fully build this out, but we're well underway. Google and Meta, they also use an auction model, right? They auction off real-time bidding for attention. There's a limited amount of ad units available, so they go to more or less the highest bidder. What Supra is doing is we're auctioning off execution priority. Who gets to execute that liquidation or arbitrage opportunity or whatever logic you might want to do? Google and Meta generate $150 to $200 billion a year per company. It powers, like, I think last time I looked, it was like 95% of Meta's revenue and 80% of Google's revenue. This is powered through an auction model. Supra intends to monetize automation in every block and redistribute that value to stakeholders. Users bid in Google Ads for high-value search terms. Users bid on Supra for execution priority of high-value logic. The more valuable the query, the higher the bid. The more valuable the logic, the higher the bid. So we think that this is a very powerful dynamic that required infrastructure changes to blockchains to capture this value, but it results in better execution for the end consumer, but also it allows us to redistribute this value to stakeholders who actually give a damn, right? So imagine if a layer 1 could capture the value leaked from the ecosystem from toxic MEV and redistribute value captured from good MEV in real time to all the stakeholders. This creates what we call the AutoFi flywheel. Better execution quality leads to more on-chain activity. More on-chain activity leads to more arbitrage and liquidation opportunities, which lead to more revenue capture, which leads to better execution ultimately. So this is what Supra is building. The vertical integration of layer 1 smart contracts with Oracle data with automation, we think are going to completely redefine blockchain economics. We aspire to completely get off of block rewards within, say, 2 to 3 years. Of course, it's an ambitious discussion, but you have to, the only way you can do that is to capture the value that's otherwise leaked to folks that may not really care. So Google and Meta monetize attention. Supra monetizes execution. We're focused on being the highest performing execution engine for Web3. We think folks will bring their assets from respective chains, even Bitcoin, to bring it to Supra, to do things on Supra you can't do elsewhere. Run these automation strategies, access our Threshold AI Oracle, basically build logic that you can't build elsewhere. Some of the things you'll be able to do on Supra, you won't even be able to do on a centralized exchange. So thank you so much for your time. Thank you, Permissionless and Blockworks, for hosting us. Really lovely to be in New York City. And the future for Web3 is bright, but we have to solve these problems, and Supra is working on it. Thank you for your time. And also, I guess I should mention that you can imagine this stack is very good for AI agents, and we're working on toolkits for them as well. We're very bullish AI, but we hope that we can keep AI honest. As an industry, I think Web3 can play a major role there, but there's no doubt about it that AI is not going anywhere, and we're going to integrate it as much as we can. Thank you for your time, everyone.